as Bitcoin comes back into conversation, some people might say, oh, wow, well, it's back and it's still a bubble. I mean, what do you make of how frothy things are now as that hype cycle, as that excitement, as, everyone starts talking about it again? Like, I would read this chart as saying, don't be scared, essentially.
I almost titled this deck, Don't Be Scared. 'Cause
All right, everybody, the price predictions to end all price predictions on Coinage today with the analyst who absolutely nailed the price calls in 2023 back with us for a look ahead to what crypto will do in 2024. Excited to have back on Coinage with us today, Sean Farrell, head of digital asset strategy at Fundstrat. Sean, thank you so much for coming back on, man.
Hey, Zach, thank you for having me back.
It's a big year, man, and I'm super stoked to have you back on because we did like one show talking about price in 2023 that was with you. It did really well because you were really right. You said Bitcoin would hit 44K. That's pretty much where we topped out after what was a wild year in crypto. And now we got you back looking ahead to what's going to happen here this year, and super excited to dig into all your research here. And I want to give a shout out to Fundstrat as well for letting our Coinage NFT holders, if you're not a Coinage NFT holder, become one today at Coinage.media to dig into this report and get the rest of your research for free in an exclusive discount and trial, which you can go to Coinage.media to learn more about that and hop in our Discord or DM us, whatever it may be. But Sean, want to dig into this because it's so important to hit. You have new all-time high calls for not just Solana and ETH, but Bitcoin potentially surpassing $110,000. Why don't we just start with that big call? Because 116K on the lower end might shock some people.
Yeah, it might shock some people, but I think, 44K would have shocked a lot of people. It did shock a lot of people last year. Our analyses always start with, macro, right? And we work our way up from there, looking at cycles, flows, fundamentals, catalysts for more near-term analyses. And the macro setup right now we see is more of a continuation of last year. If you look back at January of 2023, we were coming off of what was the most extreme Fed tightening cycle in the history of the Fed. We had just experienced the largest financial crime to have ever been perpetrated in any kind of market ever. And Bitcoin was, it looked like it was headed for, sub 10,000 around that time. But, piecing together the global liquidity setup and the fact that, liquidity conditions in our view had bottomed, risk assets broadly were benefiting from that top-down tailwind. It seemed like to us, based on what we could tell, all of the leverage had been washed out of the system. And that kind of informed our take that, Bitcoin and crypto more broadly had bottomed, and we were kind of only up from there.
Mm-hmm.
And we see this kind of as a continuation of that bottoming of global liquidity, major tailwinds this year. From a medium-term perspective, we have rate cuts on the radar. A concern for some people out there, some investors, the fact that the RRP, which has kind of served as this liquidity buffer in U.S. and global markets, that's dwindling, but the Fed's already signaled that they're willing to taper QT. Asian central banks are already easing and likely will continue to ease. And so, there are
there's a lot of reasons, I think, is mostly I think the synthesis of most of it is there's a lot of reasons here, and digging into the report, it's almost as if, we hear so much about the halving. I think at this point people know about the halving, so it's not necessarily worth digging so much into that because we've been through that cycle before, and we know that it triggers upside potential and upside moves. But when we're looking at the rest of your report, like you said, there's macro conditions to consider here that is kind of the secret sauce of what I think your guys' research well, it's a differentiating factor for most of the other Bitcoin price calls because they look mostly at the specifics when it comes to miners and things on chain, as you guys do too. But when you pair them both, I mean, what stands out to you as maybe the thing people are missing about how you get to 116,000?
Yeah, so our model kind of is based on, as I meant, not to belabor the point, but it's kind of, the base is macro, and then on top of that, we kind of look at, as you alluded to, we layer over a cyclical analysis, looking at historical trends in flows, and that's kind of how we build up our MVRV model, which is just a great way to track trends in capital flows into the Bitcoin network, and kind of the level of speculative fervor at any given point in the network's history, and we kind of map out historical rates of change, and through regression analyses layered on top of this macro understanding, we make estimates, right? These are estimates ultimately. All models are wrong, some are informative, but we think this tracks well with the current macro setup and historical flows into the network. And assuming that this cycle we get about 800 billion in net inflows, which is about double of the last cycle, and we apply a multiple, an MBRV multiple of about 3x, which is relatively par for the course during the largest acceleration phase of any bull market. That gets us to this price target range of 116 to 137k, midpoint being around 125. So it lines up with our cyclical analyses, the macro setup. Obviously, there's the line from point A to point B is never a straight line. There are going to be some bumps along the way, but that's kind of how we're setting our compass.
Yeah, I think, that's been obviously the excitement has returned. I think it's interesting because to kick off the year, the Bitcoin ETFs getting approved, in this slide looking at the fund flows turning positive, it's obviously, I think, the beginning of maybe a reversal in that trend as the excitement comes back. It's been funny to look at people saying that maybe this wasn't as hot of a start as people in crypto or on Wall Street wanted, but it's been almost kind of blowing my mind when you look at how much money has flowed in through this kickoff. And so, I mean, obviously, I think people forget that crypto is so sentimental in terms of once the tide turns, it almost begets more of those animal spirits to continue that rally. How have you seen this kind of, manifest itself in the data you've seen in prior bull runs?
Yeah, that is funny. Just to round out the discussion on the ETF. Um, there's no world in which I think today, as of market close yesterday, we were almost at $1 billion in net inflows. Obviously, there's a lot of noise because I think a lot of people are exiting GBTC and either closing out their position outright or flowing into a lower cost product. Um, but by any metric or any measure, that is remarkably impressive. And frankly, from a flows perspective, if you look at what the dollar's done over the past few weeks, and you look at where rates have gone, how equities have performed, how gold has performed, I would go as far as saying that we've seen the ETFs already act as this buoy for price, and that the mechanics have already changed. I think we'd probably be sub 40, given the macro environment to start this year.
Yeah.
And so I think that's just something to consider on the ETF discussion. And in terms of flows begetting more flows, I completely agree with you. And if you look at, one of the big reasons why we saw such, stark decreases in stablecoin market cap, which is, it, simply put, outflows from the crypto economy, is that interest rates on chain went below the interest rate provided by the overnight rate, the risk-free rate. And given more capital, more speculation coming into the space, more speculative capital coming into the crypto economy, that's kind of created this increased demand for capital. Thus, rates have gone up, on chain, and so that obviously begets more capital flowing into the crypto economy. And I think we're seeing some of that right now.
Yeah, I think the other thing to consider here, and this might be the most important chart to me, is you guys have always looked at kind of the frothiness in the market. And, some people might say, oh, wow, we're back at 40K-ish, and oh, wow, the price has dipped from where, we were before the Bitcoin ETFs even came out. Like, how frothy are we right now? And this chart to me, I think, is the most important piece because as Bitcoin comes back into conversation, some people might say, oh, wow, well, it's back and it's still a bubble. I mean, what do you make of how frothy things are now as that hype cycle, as that excitement, as, everyone starts talking about it again? Like, I would read this chart as saying, don't be scared, essentially.
I almost titled this deck "Don't Be Scared" because no,
Because once you
I
don't be
swear
burned
that was
again.
almost the title. I thought it might be a little too off-putting for some of the crypto curious among us,
Yeah.
so I went with a different title. But I think it's a great takeaway from kind of our outlook on the market right now. Is that despite the price being having rallied 2.5x off the bottom, and price being over 40K, almost approaching, I guess, 50% below all-time highs still, or less than that.
Yeah.
Relative to the historical cycles and just looking at the cost basis of all of the coins held on the network, we're now looking at a situation, a market where there's a lot of froth.
Hmm.
That chart you just had up, that's kind of an extension of the MVRV model that I had been referencing earlier. This is just the MVRV metric adjusted with a Z-score, because during any stage of the bull market in which we have a really aggressive, violent run, and speculation really starts to pick up. It's all about the rate of change for that MVRV metric, and that's why you have to adjust it for a Z-score. And looking at it from that perspective, you can see that we're still well below, where um, uh, where that froth has been achieved in prior cycles. And so
Yeah.
that's why I just think it was important to add this slide, and to I think it effectively articulates how relative to historical trends, we're not really looking at a very frothy market at this
Yeah,
point in time.
I love the idea of maybe potentially calling this whole thing "Don't Be Scared" because, like, if you lived through the FTX collapse, the Terra Luna collapse, you're like, there's no such thing as reasons to be bullish on crypto anymore. And like now, after we finally come out of being shell shocked, I think it's a good kind of sentiment check in. And then, like I said, those reasons by themselves might be enough to be bullish, but because it is something that I think is worth hitting, let's talk about the halving because, and this will be the last thing we chat about Bitcoin before we move on to the other pieces in your report here. But that by itself might be enough to just say, okay, more funds coming in, this narrative kind of catching some steam, everything else you mentioned by itself might be enough reason to not be scared. But then you also have the halving. And just for people who don't know, real quick, it's just the supply that comes onto the market of Bitcoin getting cut in half by the miners here. We've seen that trigger a lot of enthusiasm before in Bitcoin's price and upward moves. I mean, how does that, added on top of the reasons you've already discussed, really make this a double down on don't be scared in 2024?
Yeah. So I'm sure most of your viewers are familiar with the halving, and I think the raging debate is over whether supply truly affects price and whether the halving is because it's not, these are programmed, right? It's in the code. So theoretically, at the Genesis block, these should be quote unquote priced in, um, if you're an efficient markets person. But so far, we are 3 for 3 on historical price increases around the halving. Uh, it's there's no denying that from a daily, weekly, annual flows perspective, it does decrease the flow of Bitcoin coming onto the market, right? And so that changes the economics for miners, and and does put this, uh, it drastically changes the rate of change of Bitcoin coming to market, new Bitcoins coming to market. And so I do think there is a halving effect, that people don't effectively price in. But at the same time, at the very least, it will spur a narrative, right? And narrative spur demand. And so I think you kind of get this situation where you have the best of both worlds.
Hmm.
Both sides of the equation kind of working in the investor's favor.
Yeah, I know. I think it's super important to highlight. So I'm glad we touched on it because I think the one thing that separates Bitcoin from the rest of traditional equities and the other pieces of the market that everyone knows about is there's still so much confusion around Bitcoin and the way that it works that I'm not sold on the idea of the efficient market hypothesis around crypto just yet because people are still learning. So I don't think that it's fully there yet. But maybe that's a good segue to chat a little bit more about ETH because so much of maybe the confusion to start 2024 was around people being caught flat-footed on the ETFs even getting approved. If you were paying attention, you might have known this. As we look at ETH ETFs, that might be a good segue for what your thoughts are on ETH and where that goes in 2014, because it sounds like the market's pretty split. You and I think, are on the same page around a 50% chance of ETH ETFs getting approved in 2024. I might take the under on that. But where do you see ETH going? And you say it's going to be a new all-time high in 2024, so I'll give the surprise away. But how do we get there, I guess?
Yeah, so I think the takeaway from the ETH ETF and knowing that it's coming is that people will speculate regardless of whether it's approved or not. And so I think we do get some strength out of ETH and ETH beta names up until that point. We probably see the ETHE discount to NAV compress the same way we saw GBTC. So that's obviously a great place to be. In terms of whether it gets approved or not, if you look from a legal perspective, and not a legal expert here, but it does seem like they should be approved. I'm not concerned from like a security designation perspective. If you look at ETH futures that are traded on the CME,
Mm-hmm.
the CFTC kind of acknowledged that when they launched those futures, right, they kind of had to acknowledge whether they were a futures product for a security or a commodity. They labeled it as a commodity, and the SEC knows that happened and has implicitly acknowledged that exists, that commodity designation. So I'm not really concerned from that perspective.
Mm-hmm.
Uh, and obviously BlackRock, being whatever their record is on ETFs, 801 certainly works in the ETH ETF's favor. Um, but it could be a case where Gary and his posse, make the courts, um, make it, just find a reason, whether it be I don't know, activity in DeFi or what have you.
Mm-hmm.
Um, and eventually, the courts like just compel them to approve it. So that's why we put a 50% probability on that.
Yeah.
We'll adjust that as we move on in the first half of this year.
Yeah, I mean, obviously it changes by the day, I think, in all these updates and reading the tea leaves. We're going to have Hester Peirce on, actually, SEC Commissioner, back on Coinage to chat a little bit more about that. So maybe we'll learn whether or not we
Yeah,
should change
I
our,
also
our
I also
model.
don't want to steal any valor from from James and Eric, the Bloomberg boys, who have been absolute stars of crypto and ETFs and just Twitter over the past year plus. I
Yeah.
mean,
Yeah, we had
I've
James.
learned an incredible amount from them, and they've been on the money. So um, perhaps our probability will deviate a little bit from theirs,
Yeah.
but not by much.
Yeah, we had James on the show as well, and talked about this. He too is on the upside of 50%, so we are differing a little bit. Ellie Tarrant as well, I think, sided with me in being on the under for 50%, but we'll see how it all shakes out. And I think generally the consensus is we'll eventually get there, just a matter of how many shenanigans the SEC and Gary Gensler wants to throw into the mix. But when you look at, I guess, beyond the ETF, how do we get there to a price target that you have above 6,000 on ETH, even if you remove the ETFs? Because you also highlight, I think, this piece, which people might overlook, is the layer twos on a slide in your report here, looking at that piece of it too.
Yep.
I mean, technologically speaking, how much this debate is now kind of coming back again, Bitcoin versus ETH, as Bitcoin gets so much attention. But I think for 2024, the pendulum seems to be swinging back.
Yeah, well, ETH kind of hurt itself. When I say ETH, I mean the ETH evangelists and the ETH community, they kind of latched onto this sound money narrative and tried to compete with Bitcoin on a censorship resistant, criteria. And, they were never going to win that battle. And they were trying to do too much. And I think they suffered as a result. And frankly, from a trading perspective, it was just an over-owned asset. And so you now have this situation where ETH, save for the past couple of weeks where it has rallied, has become this just super hated asset. And so being a hated asset is kind of a reason in and of itself to really like ETH here. But in addition to that, we have, the EIP 484 coming in February as, it's scheduled. We're more bullish on, owning L2 names into that, but certainly should garner more interest in, the ETH ecosystem. Counterintuitively, 4844 is actually probably less value accretive to ETH mainnet than people think, because it reduces the fees that L2s have to pay. But that's neither here nor there. I think I think people will just be excited about I think the fact that ETH is underowned and it's hated, and there'll be a narrative into the ETF is enough to power that ETH BTC ratio higher. And then into year end, right now our model has a ETH BTC ratio, I think, of under 0.06 end of the year, which isn't astronomically high. I think so. I think you just have to assume that if Bitcoin, more than doubles from here, that's a lot of it's a pretty significant wealth effect. And so I think as a result, it's not too hard to get to that 7,500 number.
Yeah, I mean, I think it's pretty exciting to see, and of course, there's always been that battle back and forth. I guess last question on ETH too. You mentioned kind of the way that the L2s are building on top of it. That to me was the initial gut reaction from the investor community. Is, wait a minute, why is there going to be so much demand for kind of layer 1 Ethereum block space if you have so many layer 2s now building on top of it and passing that info down, and they're getting more efficient at it, and there are more options, whether it's Base, whether it's Polygon, whether it's Optimism. I mean, the list goes on. I mean, how do you fit that into? I would see it as an overhang, but that's not how it's been, and it doesn't look how that's your model's anticipating this to go.
Yeah, I mean, look, there definitely is a greater dispersion of liquidity in the ETH ecosystem now, right? And that's why, when we recommend or structure our, portfolios and our recommendations to clients, we always include some ETH beta names in there, just due to that liquidity dispersion risk, right? Just because, people that are paying attention to ETH, especially crypto natives, if they, if you say that, hey, ETH's going to get a bid, I don't know about you, but first thing I'm doing is looking for, an L2 or the name that's had the best, strongest correlation, strongest beta to ETH in recent history. So, I don't disagree with the fact that that's something that will need to be managed and looked at, and a risk to be considered.
Well, let's pivot away, because I think, we talk so much about Bitcoin and ETH, and you can probably get that on most mainstream outlets now. Me coming from a CNBC background and Yahoo, Bitcoin obviously talked about a lot. Ethereum talked about a lot. What you and I were talking about to wrap up 2023, though, was Solana. And just by in and of itself, more people talking about Solana on some of the mainstream outlets might be a win for them as it gets included in these discussions. A lot of people might think, if you're farther in crypto, if you're deeper down the rabbit hole, that you missed the boat on Solana in the big rally to come back, to storm back from $9 to break 100 in 2023. But you and I were chatting, and you say it's definitely we're still early on Solana. And then I look at your price call, 500 to 600 in 2024. So maybe it is really that early. Talk to me about how you look at Solana in 2024 and why it's still potentially a good opportunity for people.
Yeah, so I think this, if we're talking about the construction of this price target, this kind of would put us, assuming that our call on Bitcoin is correct, this range kind of puts us pretty close to the Sol BTC high from the last cycle, and also maps pretty closely to the change in all-time highs between the first and second cycle for ETH. And
Hmm.
so, there's some, fractal implications there. But that's kind of how we coalesced around this 500 to 600 range. And yeah, look, I think the reason Solana, was we were so constructive on it. Well, first off, we spend a lot of time in that ecosystem, just around devs and builders in the space, and so um, you just got a more granular understanding of the mission and kind of the developments there. Um, Beyond price, right?
Hmm.
And it's an ecosystem we like because it's different from the other two, right? It's a smart contract platform, but it's they're building in a completely different model than some other L1s, right? And they have a very concise, very pointed mission statement, right? Consensus at the speed of light.
Yeah.
Um, and there's this jockeying for the third, quote unquote, third best, right? Within the crypto industry. And to us, we see Solana as filling that hole and becoming that third asset in every in the traditional and the standard crypto portfolio.
Yeah, I'm glad you mentioned kind of the idea of the like where that enthusiasm's coming from because I definitely look back at kind of the SBF and FTX attachment to Solana and why I think it was so dented and why it collapsed around that because not only was the connection there but also FTX had a good number of Solana tokens that people were afraid might get dumped on the market and that narrative's now gone. And I think beyond it when we've chatted with Anatoly about what's happening within the community. Fire Dancer, I'm glad you put that in the report because that was one of the first things we ever covered on Coinage was the idea of the network itself getting stronger as they build that piece out, which is crucial. But you also highlight here, too, the idea of stablecoins coming on and that enthusiastic piece and push as money just simply becomes easier to operate with on Solana. And I feel like it's another piece that is overlooked when people talk about what's going to catch steam is just the ability for huge money players, traditional finance players, to inject cash, legitimately stablecoins, into an ecosystem. And that seems to be a big theme that you highlight here beyond price targets to watch when it comes to Solana in 2024.
Yeah. I mean, look, we've seen we've seen Visa come out and say that they're running sandbox experiments on Solana, and that's another reason why we're super constructive on that ecosystem. And I think there's just a whole new cohort of users that have been introduced to crypto via the Solana network, and we'll kind of go there by default instead of going to Ether and ETH2. And yeah, so one of our predictions, and these are kind of less price focused. Um, as a lot of people in the space know, USDT on Tron is a preferred stable in a lot of the global South. I think we'll see a move towards having USDC on Solana eat into some of that market share in terms of
Mm-hmm.
being used as this payment rail and store of value in these communities where there's hyperinflation or wherever USDT on Tron is now used.
Yeah, I think it's a huge piece of the puzzle here as we put together some of the big predictions beyond price in kind of thematics. Whether it is kind of AI and how integrated that'll be for crypto, and then you also highlight kind of this is an election year. You kind of highlight on-chain provenance for content attribution. I saw that Polygon and Fox are working together on like verifying certain things. I think deepfakes might become a little bit easier and more dangerous. We're already seeing it with ads, by the way, fake ads everywhere. If you're watching this
Oh
on
yeah,
YouTube, you got a shit
oh
ton
yeah.
of fake ads there. So I think that those are some pretty interesting themes. I did notice though, Sean, there's one missing narrative from your big predictions and big themes here that really hasn't come back yet, which is the metaverse. I'm just kind of curious, like, there was so much hype around that before. Are you kind of surprised at how many narratives fall off? Because now we're back in a bull cycle. No one's chatting about the metaverse.
Yeah, surprise, no. I don't have a lot of strong views in either direction on the metaverse. I think uh, I think immersive worlds are very hard to build, um, particularly ones that are better than, say, a Roblox or uh, some other centralized platform can build. And so, similar to games, they just take a long time to develop and reach adoption.
Hmm.
And so, yeah, no strong views in either direction there, frankly.
Yeah, I put my we spent a whole episode putting my shitty New York City apartment into Decentraland just to see how hard it was and what can come from it. And so we're still waiting to see if that appreciates over time. But we do have the plot of land, and the Coinage DAO co-op owns that plot of land in my shitty New York City apartment. So that was a fun little experiment. But
I love it. The
Decentraland
only the
doesn't
only
seem.
place where real estate is down only. Down only.
Yeah, I don't disagree. When we step back though and think about maybe some of the warnings for people, right? Because I think still to this day, some of the most painful things, as a journalist watching this, is sometimes the narrative getting out of control and shaking out the little guy when we see volatility hit. And you dedicated a whole slide to embracing the volatility here because I think that was even a play with the ETFs, right? Price collapse. People were like, what the hell happened here? This doesn't make sense. But in the long run, I feel like it's an important note to hit of just maybe warning people is that, look, things don't always go smoothly up and to the right. So what would you call out there?
Yeah, I would just point out that last year was kind of an anomaly in terms of the how little volatility we experienced, and when I said how little, I mean in terms of daily moves of 5% or more. Um, for the entire calendar year, we had 7 drawdowns of 5% or more. I mean, that's, I think, the lowest of all time. And, if you look, it's not exclusive to bear markets, these drawdowns. In fact, you could argue that there are more drawdowns in major up years, right? It's volatility is a double-edged sword. And so this was kind of just a reminder to our clients that volatility is a feature, not a bug. And we will have opportunities to buy dips, and in bull markets, dips are for buying. Um, yeah, so it's just a good reminder.
Yeah, I think that, again, as we inch farther along the spectrum, it's always a consideration, in Bitcoin. And Bitcoin's volatility, I think, in general has come down quite a bit from the early days. But as you inch farther down the spectrum beyond Bitcoin, it's always something to maybe be careful with. And I think, just looking at ways for people, obviously we're a crypto show, so we talk a lot about tokens themselves. But when you step back and think about the run that Coinbase has had, I wouldn't want to overlook it as maybe a way to play picks and shovels as, people come back into this space. I mean, what would you highlight on the Coinbase front? We dug into how much of a change is happening around their business model right now with the Bitcoin ETFs custody. They owned that whole thing, man. They have like
Right.
almost all of the Bitcoin ETFs, and that's not a free service. And so, costs are high for retail consumers right now, but they might be pressured when it comes to trading on Coinbase because if you want Bitcoin exposure, you can go to these ETFs and fees have never been lower. So, how do you look at Coinbase maybe as a way to play it, and how big the changes are to a company that now, with no Binance really in the US and no FTX, is basically the last domino, last player standing?
Yeah, no, I mean, I think, one, they've done a good job of diversifying the revenue streams, as you mentioned. They've had a bunch of product launches and completely restructured their relationship with Circle such that they're going to, now share interest income with, for all USDC, not just USDC on platform. So that's going to help profitability. Um, and I think people are taking the customer that buys Bitcoin in their Fidelity account, and the less fee sensitive person that wants 24 access to their Bitcoin, and looking at those customers as fungible and one and the same. But I view the customers of the ETFs as incremental, and I think we see less churn in Bitcoin volume than I think a lot of people are modeling in. Um, and in addition to that, it's even if Bitcoin volume does decrease, they still have the long tail vaults that to service customers with. So
Yeah, I mean, the run back and the from the bottom has been pretty nuts, but I just feel like it's an interesting way to maybe play this as if you don't want to go deep down the rabbit hole, which I wouldn't blame anyone for doing because it really weighs on your soul and gives you wrinkles. But if you don't, then maybe Coinbase is a way to play it. And I don't know if you've had those conversations with people as well.
Yeah, yeah, I mean, I think, look, equities, crypto equities are some of the best alts. Our view is kind of that, some of the risks we highlighted in the near term were, repricing of short rates. And I think we're going to have some significant coupon issuance coming up beginning of next month. And so that equates to rate increases, right? And so whenever rates are going up, as publicly traded companies are going to be more sensitive to, say, the 10-year moving up to 4.2, 4.5, wherever it goes. And so, these crypto equities are going to underperform, Bitcoin when rates are going up, right? But, when Bitcoin catches a bid, I think, and rates start to bottom, I think that's going to be a great place to park some capital.
One other thing too, I mean, we chatted about this real briefly last year, and it was just kind of the beginnings around the Bitcoin narrative when it comes to ordinals. It's gotten a lot of attention last year in the back half, and then kind of, I don't know, it doesn't really seem to get that much attention anymore. But I think that might be changing soon. When you look at maybe how that plays into this, we were just chatting with Caitlin Long yesterday on the show, and transactions on Bitcoin obviously matter when you think about miners. What would you call out as ordinals? Because you were early on that to keep your eyes on it last year. So how does it maybe change the dynamic this year?
Yeah, I think the major takeaways are twofold there. One, it makes miners a lot more profitable, right? A lot of the, at this stage in the cycle, there'd probably be a lot more concern from a profitability and, a runway perspective for a lot of these miners heading into the halving, because of course um, their margins are deeply affected by the halving. There's no doubt about that. Holding price consistent. But the ordinals definitely, and the fee pressure created by them definitely help miners. And the other major takeaway is kind of uh, the the desire that it's created and the interest that is churned up in Bitcoin, and it has enhanced desire to build applications and layer two networks on top of Bitcoin. We were very constructive on stacks. We still are into Q1 and their Nakamoto upgrade. But we think there's going to be other layer two networks, more DeFi activity that happens on top of Bitcoin. And yeah, I think you can kind of blame ordinals for that narrative and that tailwind for Bitcoin.
Yeah, I think it's just been funny to watch because it was such a big thing, for ETH in their big year, right? And Sotheby's and everything getting into NFTs and art on chain, first on ETH, and now the pendulum swinging back to Bitcoin and seeing that play out. I just think it's kind of funny to watch as the auction houses now make a big deal of listing their first ordinals. So we'll see if that kind of hype cycle continues and brings more attention back to the granddaddy Bitcoin crypto chain here. But you personally, Sean, we're pretty much at time, but I kind of wanted to ask you yourself, because you and I have been chatting, I guess, for years now about crypto, and you at Fundstrat have done such a good job of predicting these things. Again, as we said, you nailed it last year. I suspect, I have every reason to suspect you guys will nail it again this year. But for you personally, I mean, how much has the market changed? Has like the research game changed in this space relative to when you kind of first started and really dove deep down the rabbit hole as well? I mean, what's the big thing to call out for what you've seen in putting this report together?
Yeah, so I mean, from a research perspective, I think the market has gotten a lot better and more. There are a lot more really reputable and good resources from a technology perspective. I think a lot of crypto research teams out there are good at dissecting technological developments and some of the more early stage stuff. I think where the space kind of lacks is probably this orientation around crypto and traditional markets. And I think that's going to be, and on the flip side of that, from the research teams at, these banks and these traditional institutions kind of lack the, they're good from a markets perspective and a macro perspective, but they kind of miss the whole, crypto thesis overall. And so, it's kind of where we try to position ourselves kind of in between both of those worlds. And, I think that's going to be more important than ever going forward. And, something we're going to continue to try to execute on going forward.
Yeah, I just again, like I said, it's a pleasure to have you on because, I don't think I've come across anyone in my career covering this be as good at predicting the price moves and the big trends in this space than you and your team at Fundstrat. And so just wanted to give you a shout out on that again. And if there's one thing to maybe leave, we didn't talk about it at all in 2023, I don't think. The narrative kind of went away a little bit, but if I remember correctly, there was a little bit of a tidbit of a nugget around Dogecoin, and I just always like talking about it because it's kind of fun, and we haven't seen Elon talk about it in a while. So I do want to give a shout out to maybe your call for 2024 around Doge as maybe something that people should keep an eye on.
Yeah, so I mean that was more of a tactical. So to be clear, I do think looking ahead, we haven't made it official, but I do think Doge will get bid at some point. The Doge call that we put out a little while back, that was more tactical and was kind of centered around a prospective rocket launch that was going. They were sending a satellite to the moon, and the satellite actually had a physical Dogecoin on it. And there are serious elements of crypto. There are less serious elements of crypto, and we kind of foresaw some speculative fervor building up around that rocket launch. And so, so that kind of had a shelf life on it. But looking ahead, Dogecoin has been a great option on risk assets and crypto overall for every cycle. So, would not be surprised to see Doge make new all-time highs this year as well.
That's a big call, man, because an all-time high would put it back above 60 cents. And it's right now at like 7 cents. So I don't know. I mean, I think that's just one that's always fun to throw in the mix because as serious as all the research that goes into what you guys do in looking at Bitcoin and ETH, it's always just kind of crazy to see some of these other coins that may have a good year just because Elon brings attention back to it. Or like you said, a rocket goes into space. So it's just kind of a good reminder to be like, what are we really doing here? Which I think makes crypto fun and interesting. But Sean, I can't thank you enough for coming on, man. Thank you so much for the time. And again, thank you to the Fundstrat team for offering Coinage NFT holders the ability to dig deeper into not just this report, but all of your guys' research to join the Fundstrat fam as well. Sean Farrell, Head of Digital Asset Strategy at Fundstrat. Thanks again, man. I appreciate it.
Yeah, appreciate you, Zach. Thanks for having me on.
That'll do it for us. Thanks, Sean. For Sean, for myself, for everybody at Coinage, thank you again for tuning in. You can catch all of the latest headlines in Web3 and crypto at coinage.media, as well as this replay and more insights to come in what's going to be a hell of a year, I think, and Sean thinks. Thanks, everybody, for tuning in. We'll see you again soon.